Well, I think we hit on the main things. The earnings collapse that we saw in 2015 was the worst earnings decline outside a recession that we've had for decades. And by the way, it was all due to the collapse of the oil sector. If you take the oil sector out of the S&P, earnings were actually up in 2015 over 2014. If you put them in, S&P operating earnings were down 11%. That's a huge swing. And the fact that oil has come back, I think convincingly, from its February lows, I think is a very positive for the market going forward.
What role do interest rates then play? The expectation, I mean, we've been waiting for the Fed to raise rates. They finally did one time in December. But does that hang over this market, or are we just kind of taking that in stride right now, expecting them to do nothing for the foreseeable future?
Well, I don't think a rate hike is out of the question this year. If you look at the futures market, it looks like maybe one more. And I think we have to look. But one thing that one should realize, especially if you're a stock investor, they're not going to raise rates if it looks like the economy is going to sinking back down, if it looks like deflation is returning, all those things which are bad for the stock market. They will only raise rates if they see economic strength, if we see prices stabilize. So it's not an all bad scenario, even if they do raise rates once or maybe even twice to the end of the year. I don't think June is in the picture now. The Fed would have given us a hint unless we get some really bad inflation news over the next 4 weeks. But I don't think we should rule out the rest of the year. But it isn't a necessary bleak picture for equity holders, even if they do raise rates.
I do wonder, though, I mean, coming into the year, everyone was set up for the higher rates trade after the first one. That didn't happen. They got creamed. Now everyone seems to be on the other side of the boat. We know what happens here. And so if the Fed, and remember, some of these guys have been out there talking like they're going to raise rates 2 or 3 times a year, or that conditions look good, or look at the retail sales report. What happens if they raise rates in June, or at least sooner than the markets are currently positioned for?
I mean, then you're for some more, I think, turbulence in the market if it really does come sooner. Remember, I mean, the oil collapse in early February down to 26 was devastating. I mean, we saw 10% wipe out the stock market in a matter of 1 or 2 weeks, and around the world, I mean, many people were saying we're already in a recession. I mean, we just got to get the data. Well, now we look back. Oil has come back. It's put in a low. Emerging markets have come back. I think they put in a low. China has not collapsed. Remember how much worry there was around that. So now what we need is those earnings to move up, because, I mean, they have stalled out. And until I think we're going to be in this range until we see a breakout of earnings, hopefully with the better retail sales, the consumer going forward, and oil stability, we will get it towards the second half of the year.